Tēnā koutou, tēnā koutou katoa. Greetings, everybody. It's my pleasure to be here with you today. It gives me great pleasure to participate in this conversation on this important topic and serve in a panel with complementary work. In some ways, I'm a little bit intimidated in terms of talking to my colleagues about COVID and labour markets, because we're all experts on it, right? We all participate in these labour markets in various ways, and we all observe what's going on. It's sort of a bit like commenting on the All Blacks and the selections for this coming week. But having said that, my agenda today is to focus on some issues which I think are of importance to the profession. I'm not so much interested in critiquing what the government has or hasn't done, or praising or critiquing what industry participants have done, but to think about some of the issues. And so that's where I'm going to end up today. So we'll see if we can get this moving on to the next screen, sorry. So as has been pointed out already, we're clearly in a dynamic environment. Things change. The shock of us sitting at home for this conference rather than being in Nelson. And these changes have had a dramatic impact on the labour markets. And of course, we're well aware of what's driven these pressures. The ability to work, the availability of people to work has been impacted by workplace restrictions. We can think about the levels of activity that we are allowed to participate in. We can think about the movements, the restrictions on movements at the borders impacting arrivals and departures. But as well as these behind the scenes, there has been impacts on the demand for certain products, and there has been disruptions in supply chains, as we've talked about. And so in this context, our government has responded, and I think it's accurate to say the response has been driven significantly by health concerns. And the one sort of philosophical or positional, ideological or positional characteristic has been a sense that this is an opportunity to reduce New Zealand's dependence on imported labour. But of course, decisions are not just made by the government. The industry responds, and amongst all the different subsectors, we've seen lots of adaptation, and we've seen some investment as farmers, growers, processors, others seek to respond to the challenge and remain financially viable. And of course, they've also responded to the policy situation in large measure by complaining. It's been difficult to come up with constructive solutions. So where I'm going is I want us to think about things from a global perspective first of all, then come back to the New Zealand labour market, and then finally focus in on the primary industries of New Zealand. And as I said, my concern is what should we as analysts be doing? So we observed that in response to the COVID outbreak, the major initiative of government was subsidies in essence to keep people employed, complemented by rules to keep employees safe. And so those were the two major impacts which were directly impacting the labour market. And of course, next to that was the stopping of people travelling. And so that, of course, had its impact in terms of labour shortages in specific places. What we found is that preceded was that traditional employment channels by which people gained labour and labour transition events occurred started to break down. And so if we look at data from the OECD, for instance, we can see that online job postings dropped dramatically with the arrival of COVID, and I guess that's not surprising. It seemed to affect almost all sectors and occupations, and we see that the nature of job postings changed with clauses like, working from home as a required condition of employment. So the nature of offerings changed, but we also found that there was changes in the demand for jobs with different levels of qualifications and expectations. The lower qualification end of the market suffered more. And we find, there were a few areas like the health sector and other essential sectors where demand for labour and job postings increased. But surprise, surprise, or perhaps not a surprise for those of us who have seen various kinds of markets overshoot at various times. If we look at vacancy rates in the UK up until June this year, we see that, there was the big downturn associated with COVID last year. But if you look at vacancy rates at the end of June this year in the UK, they're higher than they've ever been before. And if you think that's a one-off kind of situation, we can think about Australia, and we can see how, July 2020, the vacancy rates had dropped right down. But again, by this point in 2021, they're higher than they've ever been. Are we surprised? In one sense, we shouldn't be. Though, of course, it's very easy to be surprised by the strength of this rebound, but it reminds us of the intersection between capital and labour in the economy. If we think about the impact of Reserve Bank policies, if we think about where interest rates are at the moment, where we think of how asset values have risen dramatically for many classes of assets, it's not surprising that there is demand for additional labour in various parts of the economy. But let's step back. I said health concerns were important, and they have been addressed in New Zealand, as we know. But if you look at death rates in United States counties, if you look at COVID cases, you see that there were very real adverse experiences through much of the United States. And to complement Val's comments about meat processing in New Zealand, we should note that in the US there were significant COVID-19 outbreaks in various beef packers plants, and that caused very substantial disruption. So it's good that we were able to avoid that here. I think the other thing that I would note is that the share of expenditure spent on food in the States did decline significantly last year, and so we shouldn't be surprised if it had an impact on various categories of product, and so have flow-on effects into the labour market in New Zealand. But it's very easy to start our conversation by thinking as if the world started in February 2020. But we need to remember that there's been big changes in the agricultural labour markets over the last couple of decades. And we can see that there's the potential for high unemployment and labour shortages to coexist in various in specific labour markets. And that is, there's a lot of heterogeneity in those labour markets. And alongside that, there's been changes in society, and we see far fewer farm workers willing to travel long distances in response to the promise of a new job. If we think particularly again of the US and Australia and in some other locations, historically there were many workers who were prepared to work in one location and then move on hundreds or thousands of kilometres. But there's been a smaller population of people willing to make such transitions, and we can put together our hypotheses as to why that may be, pertaining to two-income households and other factors. But if we think about the international backdrop, safety is critical, otherwise you do get COVID in the workplace with all its devastating impacts. We see that employment sustaining policies like the employment subsidies don't really address the dynamic challenges of fluctuations. We are reminded of what we've always known, that a lot of agricultural work is seasonal, and so that has its unique characteristics. We see that domestic labour in most countries is less mobile than it used to be, and the reliance on migrant labour is challenging. And yet the efficacy of the labour market is critical, and it's interesting to observe these mismatches which are starting to emerge. And so we have these shortages emerging in primary industries where they are competing in tight markets. But if we come back to New Zealand, we will move through this section a little bit more quickly. We are familiar with the wage subsidies, the alert level impacts, the border settings. And it's important to think about the COVID vaccination rates in specific industries, because that impacts their ability to keep functioning. And likewise, it's important to keep in mind what's happening in our specific macroeconomic context. And again, I'd emphasize the impact of lower interest rates. What actually happened? Well, we saw employment and unemployment fall when COVID struck. And so that means that we need to be very careful when we interpret the data from this period. We see by June 2020, there were 11,000 fewer people employed across the country, but I draw to your attention that it was 1,000 fewer men and 10,000 fewer women. So there's some things behind the headline numbers that we need to examine. And if you look at this difference between June 2020 and June 2021, there's surprisingly little difference. But what the major difference from my point of view is what's happened to the underutilization rates, going from 12% in June 2020 to 10.5% in June 2021. So the whole issue of whether people participate in the labour market at all. We know about the wage subsidies and their impact, and of course we'll be seeing some additional payouts coming in the next few weeks, and so that's another thing for us to keep track of. We've already talked about how arrivals from offshore quickly came to a halt and haven't rebounded at all. So we know subsidies sustained many firms and jobs. Private and public activity boosted some sectors. We can think of Reserve Bank policy impact on housing demand and housing supply, construction taking off, etc. We're aware of the impact of border restrictions and people returning home. But one of the things which has panned out is that there are high levels of employment opportunity in most urban areas. And so this is very significant for rural areas where many of our primary industries are dominant. So if we come to the specific primary industry sectors, if you can see here, there's a base level of employment in the particular sectors. I don't have all sectors. I haven't got the pork industry here, for instance. But the current concern is the shortage of employees available for many of these sectors. And it's a bit of an irony concerning much of our economic literature of the past, which was talked about the farm labour problem and the ability of, could the urban sectors absorb the surplus labour from the agricultural sector? Well, now the challenge is reversed as we try and attract sufficient labour for these primary industries. And it's clear that agriculture, forestry and fishing is an outlier. If we can look at filled jobs in this sector and compared with others, construction's doing well, their jobs are being filled, but at the other end, agriculture and forestry, there's an aggregate problem. But so much for that. I want us to focus our conversation about our work as economists and analysts. And when we get to work on the labour market, we find lots of different challenges, even the very definitions. When we talk about the kiwi fruit industry, are we talking about the number of employees at the peak of harvest, or are we talking about the number of FTE equivalents over the year? And we often find that conversation in the policy spaces involves a lot of talking past each other because people use different statistics, and it makes it very difficult for analysis. We don't have good labour statistics for individual industries, which take account of the monthly variations of data. We even have debates about where we define an industry stopping and starting. Then, of course, there's the whole issue of how do we evaluate future scenarios? If we look at one policy versus another, do we use the base prices or what we predict the prices would have been in the absence of COVID. And so, you know, we tend to think that a lot of these principles have been well written down in the past, but I suggest there's not as much guidance there as we would expect. And then many of us get asked to discuss the impact of certain restrictions or certain policies, and we use some variant of an input-output model or its equivalent. But I suggest to you there have to be questions about the validity of coefficients when applied to very dramatic shocks as compared to the historic situation. And then when we start talking about employees and FTEs and this kind of thing, we know that there is a big difference between average FTEs, average employees, specialist FTEs, specialist employees, and marginal FTEs and marginal employees.
So a couple of minutes, Frank.
Okay, so despite that, we've done some analysis. You'll see that the key thing is when you do analysis in the spaces, what assumptions do you use? So first of all, you need to think about how much is the labour shortage likely to be, and then how much does that labour shortage translate into an impact on production. And then we can go through and we can model the impact on industry revenue for a period, 1 year or 3 years. We can use different measures such as GDP, but we've done that and come up with some estimates, and now we're in the process of having further conversations with industry people about the validity of these estimates. And so we can do some, have a look at that in line with what Val said. The loss to size ratio seems to be much smaller in red meat and dairy, whereas for apple and pears and seafood, these are very substantial issues. But we need to remember that the impact for the industry overall and the economy is different for particular firms, because industry losses are not necessarily proportional to financial exposure, the different capital structures in these different industries. So 2 minutes, was it? 1 minute? So I just emphasize that there's a whole lot of short-term issues that we can be addressing. Building better data sets, improving our scenario analysis, evaluating priorities for limited migrant slots, etc. There's a whole lot of things which we need to do, but there's also long-term challenges that we need to address about the potential for robotics, designing farm, orchard, firm level employment strategies, evaluating the synergies between capital, labour and management, and so on. And so where I want to finish is by saying the path forward will be shaped by the future environment. We should expect climate change, pandemics, war, but we should recognise the power of creative thought and analysis. We should note the experimentation which is going on and analyse it. And there's lots of opportunity for co-creation of policy with government. And so my challenge to you and to myself is that the profession could devote as much effort to analyse investment in human capital as we do to analysing investment in biophysical and financial assets. Thank you very much.